Time versus money. We're always told we need more of both, but when it comes to building wealth, which one is really the most powerful asset you have? Well, we're about to find out.
Okay, but before we jump in, just a really quick heads up. This is all for educational purposes, all right? It is definitely not financial advice. So now that we've got that out of the way, let's get into the good stuff.
All right, let me ask you something. What if I told you that time, not money, is actually the most powerful tool you have for building real, lasting wealth?
And what if I told you that most people, well, they completely ignored this simple truth? It's kind of like a secret that's been hiding in plain sight. And today, we are going to pull back the curtain and show you exactly how it works. So first things first, we have got to tackle the single biggest myth out there when it comes to money. See, most of us are taught to believe that you need a ton of money to build any kind of serious wealth. You've heard it, right? Oh, I'll start investing when I get that big promotion. Or I just don't have a big chunk of cash to get started.
But you know what? That's just not true. You don't actually need more money. What you really need is more time. And that, my friends, is the real game changer. So you're probably wondering, how does time do this? How does it actually build wealth? Well, it all comes down to this one incredible, almost magical concept called compound interest.
So what the heck is it? Well, put simply, it's earning returns not just on your original investment, but then earning returns on top of your returns. Think of it like a tiny snowball rolling down a huge hill. It starts small, but as it rolls, it picks up more snow, gets bigger and bigger, and moves faster and faster.
Let's just walk through a quick example. Imagine you invest $1,000 and get a 10% return. Boom, after year one, you've got $1,100. Easy, right? But here's where the magic happens. The next year, you're not earning 10% on your original 1,000. Nope, you're earning it on the new total, the full 1,100. And that cycle just keeps going, year after year, making your money grow at this accelerating, frankly, unbelievable rate over time.
But look, to really see how powerful this is, let's put time versus money to the ultimate test, a little head-to-head competition.
Okay, check this out. We've got two people. Person A starts investing early, at age 20. They put in just $100 a month. And here's the wild part. They only do it for 10 years and then they stop completely. Their total investment? 12 grand. Now, person B starts later, at age 30, but they go harder. They invest $200 a month, double the amount. And they keep it up for 30 solid years. Their total investment is a whopping $72,000.
So, who do you think has more money when they both hit age 65? Is it person B, who invested 6 times more money? Or is it person A, who got that early start but put in way, way less?
And the winner is person A. I know, it sounds completely backward, right? They invested $60,000 less than person B, and they still ended up with more. How is that even possible? It all comes down to one thing. That extra 10 years they gave their money to just sit there and grow. That incredible, mind-bending result is all thanks to the power of what we call exponential growth. You see, compounding doesn't move in a straight line. It's a curve. If you look at this chart, you'll see the growth is, well, it's kind of slow and boring at first. After 10 years, it's okay. After 20, it's starting to look pretty good. But then, look what happens in those last few years. The growth just goes vertical. It absolutely skyrockets, making all those early years look tiny in comparison. That's the power of the exponential curve. And honestly, this is the exact reason why so many people give up. They start investing, they do it for a few years, but they don't see those huge, life-changing numbers. So they get discouraged and they quit. They're literally tapping out right before the rocket ship is about to take off. So let's just recap the common traps here. Why do people fail at this? Well, first, they just start too late, letting their most valuable asset, time, slip right through their fingers. Second, they expect things to happen fast, in a nice straight line, and they just don't get the whole slow build part of compounding, and that leads them to get frustrated and stop way too early. Ultimately, it all boils down to this. They just fundamentally underestimate the raw power of time.
Okay, so how you avoid all those mistakes? How do you actually make this work for you? Let's talk about your very first step.
Let's put some real tangible numbers on this. Say you invest just $100 a month. We'll use a pretty standard 8% average return for this example. After 10 years, you've put in $12,000, and it's worth about $18,000. Cool, but yeah, not life-changing yet. But wait, after 20 years, your 24 grand investment is now worth almost $60,000. Getting interesting, right? Now, let's fast forward to 30 years.
Your total $36,000 contribution could be worth over $140,000.
Just let that sink in for a second. You put in 36 grand out of your own pocket over 3 decades. But the growth, that compounding magic, added over $100,000 on top of that. That's money your money made for you.
So if there is just one thing you remember from all of this, please let it be this. Time does the heavy lifting for you. It is your single greatest ally in building wealth. And what that means for you is that your main job isn't to scramble and stress about finding a ton of extra money to invest. Your real job is way, way simpler. It's just to give the money you already have as much time as you possibly can. And that really leaves us with just one final question. If you knew, you really knew, that your single greatest asset isn't money, but the day you decide to start, would you still put it off until tomorrow?
Hey, if you want more simple, powerful strategies just like this one to help you build your wealth, make sure you subscribe. Thanks for hanging out with me today.